Hey there, everybody. Thomas with Basecamp Trading. It is Thursday, July 25th, and we're going to take a look really quick here at the S&P Futures Contract, the ES, and talk about what is going on with this market today on a daily price chart. So we're starting to pull back, but the interesting thing that I'm paying attention to is the fact that we have a run on stops and a divergence. Now, before I dive into that, make sure you go ahead and hit that like button and subscribe to the YouTube channel if you haven't already done so. But the thing that we're looking at here with the S&P is A, the run on stops, and B, the divergence. Now, the market still has about an hour left to trade, so it's only 3 o'clock in the afternoon right now when I'm recording this, so there's still time left for it to move. And also keep in mind, we have earnings coming out today that can move the markets quite a bit, so be aware of that. But the technicals lining up here. The reason this is a run on stops, first off, we broke through the previous pivot high by just a few ticks. That last high was up at 30.23.5. We broke through it, went to a high of 30.27 and immediately turned around and sold off through the floor. And now we are closing down. At least it looks like we're going to be closing down for the day. The second thing I'm looking at is the divergence. That's where we have higher high prices, but lower high momentum on both the indicator line and the histograms. Okay, so it's weakening upside momentum, and we have strengthening downside momentum when you look at one set of bearish histograms compared to the last set of bearish histograms. Okay, so we have bearish divergence, plus we have run stops, and then the last thing is what we call a one green finger potentially forming. So one green finger is when we have this green histogram here that shows up, and then we go from red, one green one, and right back to red again. Now let me show you the last few times we've had a one green finger setup. We had one right back here on the dailies, and what happened several days afterwards, we followed through to the downside. Back here we had another one. Right there. Went red, green, right back to red again. What happened? Next several days, sold off again. And then right back here we had one. Red, green, right back to red again. And what happened? Next several days we sold off again. So keep an eye on this because this is lining up as potentially a bearish setup. Now remember, it has to trigger, and divergence does not necessarily mean full-blown reversal. First off, the trigger is when you break through the previous daily low. So we'd have to either break yesterday's low today or break today's low tomorrow. And then the other thing is doesn't necessarily mean it's going to be a full-blown reversal, but what we do expect is at least a little bit of a retracement here. If we're going to have a bigger down move, we need to see it go all the way down and break below 29.69. So that's it for today, though, everybody. Hope it helps. That's the outlook for the S&P. And until next time, happy trading, everyone.